Chokkalingam from Centrum Wealth as well joins in on the show. Chokkalingam, hi afternoon. Firstly, a word on the way the pharma pack has been. The likes of Sun Pharma as well as Lupin have consecutively made fresh highs. Do you think that the pharma space in general would always find favor in a turbulent market environment like right now?
Certainly, I mean, it would continue to find favor because only FMCG and pharma, they have not disappointed the investors by showing consistent growth in the revenue and profit. But however, the investor should be very cautious because every, now and then some theme is played out on the market and valuation multiples become abnormal. And some of the stocks are really quoting at abnormal valuation if you go back to the trend. So I would suggest that have exposure to pharma sector, but definitely go for rebalancing and look for, the bargain buys. Particularly the stocks which are available at around 10 PE or 11 PE, but still showing consistency in profit and revenues. That should be my strategy.
Chokkalingam, what about the IT sector? Obviously, the rupee depreciation is going to help them. Many in the market believe that HCL Tech is probably the best beneficiary of a depreciating rupee. What's your call on the IT pack? And also, what are you expecting from Infosys this Friday?
My call on IT is that all the investors who are holding on to IT stocks, they continue to hold on because rupee at 60, definitely it's going to be concern for the stock market, and only the IT sector to a large extent can beat the stress coming from the rupee steep fall. And secondly, I also believe that since elections are likely, there could be even early elections if you go by the food security bill ordinance. Therefore, the rupee may be even sustained at 60. So that we don't have any stress on FII outflow. So in such a scenario, I would suggest to hold on to all IT stocks. Keep watching the rupee movement, and till rupee doesn't give any confidence, just hold on to all IT stocks, irrespective of the names. Of course, should not have any balance sheet concern. And secondly, within that IT pack, I would go for Infosys because on FY 15 earnings, it's trading at 13. Of course, the Q1 number may not be very impressive. There could be hardly 3-4% year-on-year profit growth in rupee terms, despite a crash in the rupee exchange rate. But still, I would stick on for two reasons. One, the industry itself is favorable to the company, and second, the new management will try to do something about the shareholder wealth as well, apart from improving the business prospects. So there could be tactical opportunity also in terms of buyback or special dividend. And thirdly, I am sure the company with the new management would come back to a significant growth path in next 1 or 2 years. So therefore, I would certainly continue to have a buy on Infosys. And apart from Infosys, I would also recommend strongly stocks like Oracle. Apart from being IT play, it's also possible tactical play on rupee depreciation. Since rupee has depreciated by about 35%, I firmly believe that there would be a lot more asset purchase by foreign investors. So therefore, I would recommend Oracle as well. But otherwise, all good quality IT stocks, investors should hold on.
Chokkalingam, what do you mind is leading to the uptick when one sees the education stocks? I mean, of course, there's news on Educom, but what about the rest of the pack?
I mean, most of the stocks have balance sheet concern. We don't know the reason, whether genuine or, is there any issue on the governance. But many of these names, if you look at the balance sheet of 2013 financial year, there is a tremendous stress in terms of inventories and sundry debtors. So, and also the stocks have been beaten down by 80-90% in the last 2 years. So therefore, there could be a technical rebound. And people who have lost a lot of money, they can continue to hold on, hope on only on tactical ground. But certainly, I would not advise buying these kind of stocks unless they restructure the balance sheet and improve the quality of the balance sheet. So otherwise, only existing shareholders can hold on to the stocks.
Chokkalingam, the auto sector is another sector that's under a fair amount of stress. We've seen now a string of negative news for specific stocks, whether it's the labor worries for JLR, whether it's even here for Maruti, the fact that they've seen a significant slowdown in demand and are having to scale down production in several of its units as well. What's your fundamental call on the sector? When do you think will the tide turn for the auto sector?
I firmly believe that the auto sector will start improving the prospects within 2 quarters, because I am of the firm believer that the reversal of interest rate cycle would continue. It's not going to be like Indonesia, because the stress in the economy is real. whichever sector you take up. And also the monsoon is good, and therefore I believe that interest rate cycle will continue to reverse, and hence ultimately the auto sector will recover. But at least for next 1 or 2 quarters I would be cautious, because as you rightly said, unfortunately when the sector is hit by the slowdown, it is also going through the labor problem. And apart from the domestic slowdown, they are also having problem of competitive pressure from the foreign players. If you take the car, you have seen Nissan or many other players increasing the competition. Similarly, in the two-wheeler, we have seen Honda Motor continuously aggressively expanding the capacity. So the pain is going to continue, so one has to be very cautious. Within the auto pack, I would still recommend only M&M and also Bosch in component. M&M because tractor segment started doing very well, and with a good monsoon I am sure the tractor segment will do well. And also in FY13 we have seen that M&M, despite having pressure in the SUV segment, overall they have beaten the industry performance by big margin, and I continue to believe that the management is capable of beating down this the pressure in the country today. And similarly Bosch, it's a great attractive stock and value stock in the auto space. And as I said, globally Bosch parent company, in majority of the companies they have got 100% stake. So I firmly believe that there is a tactical possibility of even delisting this company. So considering these two facts, I would recommend Bosch as well.
All right, Chokkalingam, always a pleasure having you with us on Markets at Lunch. That's Street View coming in from Centrum Wealth Management.